We are talking about internal reconstruction, and the most important thing in internal reconstruction, ladies and gentlemen, that we should always remember is that we should not have our shares really being overpriced. The first thing you need to do is to write down your share capital. You reduce it. Write down your share capital. You make the shares what are a little bit cheaper. When they are a little bit cheaper, if you have a rights issue, people will be able to afford them. People will be able to say, after all, these shares are cheap, these rights are cheap. I mean, let me just give them this fair capital, this fair cash that I have, even if it gets lost, so what? So the biggest thing and the internal reconstruction that you are supposed to always appreciate is that we shall have a capital reduction account. Capital reduction, there will be some capital reduction. That is the most important scheme that we have. Right? And the internal reconstruction. Of course, the other schemes will be debt holders will be convinced to buy equity, right? To buy equity, or rather to swap their debt with what here, our equity shares, right? The other scheme in this case here, from these existing shareholders, ladies and gentlemen, we must ask them to buy some additional shares at a very high discount, what we call a rights issue, At times, even some of the people who supply goods to us, our suppliers, instead of paying them this money here, we are calling small, and we start struggling, ladies and gentlemen, we can also talk to them. We swap their trade payables with our shares. The thing is, we need to raise capital for this organization and ensure that we put in proper internal controls so that in the future, this company now will never be in problems. So to help us, ladies and gentlemen, understand this internal reconstruction very fast, I would want us to do this question here. May 2018, May 2018, May 2018, May 2018, May 2018, question number 2. May 2018, question number 2 was all about internal what year, was all about capital reduction account is a big thing, right? Capital reduction account, statement of financial position after effecting the scheme of capital reduction, journal entries to record the above transactions. So what are they telling us, ladies and gentlemen, here? The following statement of financial position relates to the affairs of AFR Limited as at 31st December 2017. So I can see there, I'll end up getting so many marks without even knowing what I'm doing. Additional information, AFR Limited has been making losses in recent years. But recent board changes and the development of a new product line are believed to have significantly improved the company's future prospects. The following scheme of financial reorganization has been prepared for consideration by the shareholders and the creditors. The existing ordinary shares are to be written down to 4 per share and then consolidated into shares of shillings 10 per. Existing shareholders are to subscribe to a rights issue of 3 new shares for every 1 share held after making the changes in one above. The shares are to be issued at 11 each. The company's major supplier has agreed to convert an amount of 1 million owed to him into fully paid ordinary shares at par, right? So the bank requires immediate payment of the overdraft, but has agreed to convert the loan currently payable on the demand into a debenture carrying an interest 10% per annum payable in full in the next 5 years. We are reading this, we have a bank. This bank requires its immediate payment of overdraft, but has agreed to convert, it has a loan. Remember, we have their overdraft. They have said overdraft surrender, pay us upfront. But remember, we have a loan of this 4,000 we have given you guys. So this loan, what we have done is to agree that instead of you paying us back, right, immediately, we shall be able to restructure it. We shall be able to give you a new what year, a new debenture, right, payable in full in the next 5 years. So we shall write down this, and then we credit this new liability instrument, the new liability instrument. The development expenditure is to be written off. The development expenditure is to be written off. So you're told here, the remaining assets are to be restated to their fair values as follows. So we have land and buildings, plant and machinery, inventories, receivables. The amount in the share premium account is to be utilized in the capital reduction scheme. So they want us to give them journal entries to record the above transactions. Really, this should not even be a question for a CPA advanced level student. This is a low level question, a low level student question. Even it should be intermediate, it not even intermediate, foundation, like the FA. The FA, this is fairly a straightforward word here, fairly a straightforward question. A straightforward question. So where should we start? So it's debit credit. It's debit credit. Now, ladies and gentlemen, the first thing that we need to do here is to appreciate really that there are no major recommendations to this organization. They only have schemes of restructuring the debt equities. They only have recommendations of restructuring what here, ladies and gentlemen, the capital structure. So really, this is an internal reconstruction here, an internal reorganization of the capital structure of the company. All right, so we start with the first one. Let's first of all see how the share capital looks like. How does this share capital look like? So we have ordinary share capital of shillings 10, par value 6,000, right? Right, all right, all right, all right. So we start right away. How do we start this thing now? It's very easy. We start by canceling, we cancel the existing share capital. The existing share capital, we are finding it to be very expensive. So the first thing in practice, what we do is to cancel the existing share capital. We cancel it. So how do we cancel this? Remember, share capital, ladies and gentlemen, has a credit balance, right? Credit balance. So what we shall do is to debit. So the first journal, remember about they want us to give them journal entries, right? They want us to give them journal entries, journal entries. So we shall debit here the ordinary share capital, and then we credit, in this case here, we debit the ordinary share capital, and then we have our capital reduction what year account. We have our capital reduction account with how much here, somebody, for cancellation of the entire thing, we shall debit this share capital with 6,000, and then we credit our, so we have here 6,000, remember. So we have here our capital reduction account with how much? 6,000. So this is the major account, remember, in any schemes, in any scheme. So in this case here, what are we doing? We are canceling the existing share capital. So the narration is that this is to cancel the existing what year share capital. We cancel it. We have a problem with it. So we are doing this to cancel the existing what year share capital. Cancel like this. Cancel like this. And then now, ladies and gentlemen, what we shall do is to issue now the right class of shares. So this is the first journal we've been able to provide a narration. It's like now we don't have any share capital in this company. So now let us go ahead and issue new shares. So when we are issuing new shares, what shall we do? When we are issuing new shares, ladies and gentlemen, when we are issuing new shares, so new shares that we shall issue, listen and listen to me very well. These new shares we are issuing, what have they told us about the new shares we shall issue? This is very easy. The new shares that we are going to issue, ladies and gentlemen, here, they've told us the new shares we're going to issue here. Remember, the existing ordinary shares are to be written down to 4 per share and then consolidated into shares of what here, somebody? Great. Sorry. This 6,000, I should go back. I need to teach you something here. Sorry for that. Listen and listen to me very well. How many shares do we have in total? For the students in this case here to be, how many shares do we have in total? How many shares do we have in total? How many shares do we have in total? Not share capital. Not share capital. Not share capital. How many shares do we have in total? How many shares do we have in total? How many shares do we have in total? 600, isn't it? 600, yes. Because if you look at this, we have shillings thousands. So we have, ladies and gentlemen, here 6,000. That's share capital. So number of shares here will be 6,000 divided by what here? Divided by 10. So please mention there that number of shares that we have. Very important. Let me start this thing again. Don't rub what you're done. Don't rub. I just want to give you a very good way of tackling this. So the number of shares that we have here, number of shares that we currently have here, we have how many shares? We have the share capital, of course, in this case, here divided by par. So the share capital here is 6,000. So divided by what here? 6 million. Divided by 10, which is par value, which gives us how many shares? Which gives us 600,000 shares, which gives us 600,000 shares like that. Great. Now, ladies and gentlemen, what I would want us to do, we need to refreshen a little bit. So I would want us to take a break of how many minutes? Exactly 5 minutes. So when we come back now, we shall be able to have a chronological flow of this in a way that we'll be able to appreciate this thing from the word go. Stacking or confused anywhere, right? So we take a break of about 5 minutes. Yes, frog jumps, yes. Frog jumps, yes. So it's 5 minutes. We shall come back at exactly 8:25. Or prayer time, or 10 for prayer time. We can't resist that. So 10 minutes. So please increase the number of frog jumps. Let's continue. Okay, by the way, we never consider, but we say 10 minutes. She actually asked for 10 minutes herself. What I don't know is whether we have come back exactly after 10 minutes. I think so. Great. Now, ladies and gentlemen, I wanted to start this question in how it is normally handled in practice. So as a finance manager, when you bring in a situation of what here, an internal reconstruction, reorganization of my capital structure, debt, equity, the first thing that I would want to know is how many ordinary shares do we have at the moment? How many ordinary shares do we have at the moment? How many ordinary shares do we have? Don't rub what you have done. There's anything wrong with that. So how many ordinary shares do we have at the moment? This is a base to me. So how many ordinary shares do we have at the moment? So remember, to get number of ordinary shares, we normally take share capital given. You just told me that you divide this by what? Par. You divide this by par. So because our figures are in thousands, there is not even no reason for us even to return those thousands. So the share capital is 600 divided by the par, 6,000 divided by the par, which is 10, divided by par, which is 10, which in this case here gives us how many shares. We have to start from there. We must start from there. So this gives us, so what I've done, I've taken, ladies and gentlemen, I would want us to understand this very well because they are connected. It is internal and external, they are connected, very much connected. All right. So we are told, ladies and gentlemen, here that if you look at the share capital, what do we have? Under the share capital, ladies and gentlemen, what we have here is 6,000 divided by 10. So 6,000 divided by 10 gives us what here? Somebody gives us 600. We are in agreement. And then the next thing that I will do, after I've known the number of shares, now I've been told that the first thing that we need to do in this question, please answer the student there, The next thing we need to do in the question is to rethink about our capital. This share capital is way too high. It's too expensive. We can't use it as is to raise capital. We can't use it. Rhoda is saying that she can't hear me. Are you able to hear Mwalimu, ladies and gentlemen? Yes, so it's from her side. Kosawa, thank you very much. It's from her side. Loud and clear, yes. Now, the next thing that I need to do, now I will be having two classes of shares. I have the expensive shares and I'll have to issue new shares. Afresh. Now, ladies and gentlemen, please listen here. The expensive existing shares, the first thing we do is to cancel them. And we normally cancel them through capital reduction account. So you cancel You cancel in this case here the existing shares. So they've told us to carry out journals. So I'll come and say here, the first thing, don't try, you already this. So the first thing I will do, remember how your ordinary share capital account look, it's normally there. So to cancel, I'll debit. So come and debit in this case here, the ordinary share capital account. You are debiting this in full with the entire money which is there. You cancel it. So you debit the ordinary share capital account with 600 and then of course 6,000. And then of course, you know, not unless you are told directly which accounts, ladies and gentlemen, will be affected, 2 accounts that will be affected, not unless you are told directly, expressly. Normally for reconstruction, the capital reduction account is very important account. So of course, in this case here, the sister account where this will be able to take up the credit will be the capital reduction. So you mentioned there capital reduction. So the capital reduction account, the same amount. So of course, in this case, this journal entry has been passed for purposes of what you're canceling the existing expensive capital. So on cancellation of what here existing share capital. So that is step number 1. So we are through with this. This is number 1. Number 2, the second item. So now the second item, I know the number of shares. I'm not scared at all. Now it's about moving. So ladies and gentlemen, we are told in this question, after this, right, the existing ordinary shares are to be written down to 4 per share. So we are going to have a situation where, ladies and gentlemen, now, each of our shares will be worth 4 bob. So then what we shall do is to issue the new class of shares. So go ahead in the second situation, issue the new class of shares. So could you kindly then tell me, you guys are accountants like myself, when I'm reissuing these shares, which 2 accounts will be affected? Of course, I know ordinary share capital account will be affected. So can you kindly give me the 2 accounts that will be affected when I'm issuing these new shares? Somebody talk to me. Which new 2 accounts will be affected on this new issue? Because I want to issue cheaper shares. So which two new accounts? So we have here capital reduction and ordinary share capital. When my ordinary share capital increases, I'm crediting the share capital. So in short, I'm supposed to do like a reversal of this. I'm supposed to come here and debit the capital reduction vis-a-vis what is somebody credit the ordinary share capital. The question is, with which amount? Is there somebody who is able to give me the amount here really? Is there somebody who is able to give me the amount? Miss is raising up his hand. Is it possible to type your question? With which amount? Remember now the new share that you're going to issue will be worth 4 bob. No longer 10. No 10. 600. Remember, we have how many shares? That's why I told you to calculate those shares. We have 600 shares, and each now will be worth 4. So it will be 2,400, like that. So this one here is a journal entry that we have passed on issue of new class of shares, on issue of new class of what here? Of shares. Remember, time is of essence also here. So straight away, you go to the third journal entry. So Amici wants to know which question. You should be able to help me there, right? You should be able to help me there, please. Right? So we are told the second item here is that existing shareholders are to subscribe to a rights issue of 3 new shares for every 1 share held. So 3 new for 1 old, after making the changes in 1 above. I love this. I need a rights issue. So when I do this rights issue, could you kindly tell me the 2 accounts? Primary. I know there is a third one that will come. But could you kindly tell me the 2 primary accounts that will be affected here? Which account has to be debited here? Which account has to be credited when we have, in this case here, a rights issue? I can see Macharia coming in very handy there. Right. Thank you so much, Vivian. Vivian has already seen money coming in. We're a troubled organization. We We are a troubled organization. We are a troubled organization. So in this case here, we are issuing some rights to get money. So in short, I'm going to debit bank account. I'm going to debit bank account. So in this case here, debit bank account. And then of course we credit ordinary share capital. We credit ordinary share capital. So, but now the question will be, by how much? By how much? The question will be, by how much? Remember, they have given us 3 for every 1 new. 3 new for every 1 old. So we'll make sure 3 ile new equal due. So in this case here, basically the number of rights to be given will be 3 over 1 times what here, somebody, times 600 shares that we have at the moment. 3 over 1. Always on ensure the new shares are on top when you're calculating this. 3 new for every 1 old. And in total, we have a 600. We have 600 old. Thank you so much. And each of these rights is going to give us a how much? Each of these rights, these guys have told us that each of these rights, ladies and gentlemen, will give us a how much. They have told us that each of these rights are to subscribe to a rights issue of 3 new shares for every 1 share held after making the changes in 1 above. The shares are to be issued at 11 each. So each right will give me 11 more. So times 11. So is there somebody who is able to give me this figure, ladies and gentlemen, you good students? Is there anybody who is able to give me this figure? Yeah, consolidation. We'll come back to that. So 3 divided by 1 times 600 times 11. What figure are we getting here, somebody? What figure are we getting here, somebody? 19,800. Thank you so much. So I will debit this. But now listen and listen to me very well. Listen and listen to me very well. Let's try to understand this 11. Let's try to understand this 11. Remember, what is our current share price? What is our current share par value? What is our current par value? Our current par value ni ngapi, somebody? Our current par value. What is our current par value? What is our current par value? What is our current par value? What's our current par value? What's our current par value? So remember, what we have been told, ladies and gentlemen, here is that leave alone this consolidation. Leave alone this consolidation. The thing is, we need to do a write down to 4 per share, right? And then consolidate this into shillings what here? 10 per, right? 10 per, right? So the companies, existing shareholders are to subscribe to a rights issue of 3 new shares for every 1 share held after making the changes in 1 above. The shares are to be issued at shillings 11 each. I'll handle the consolidation up there. For now, I want you to take that our par value is this written down value of 4. Our par value is this written down value of 4. I'll handle the consolidation later. So, ladies and gentlemen, listen here. We are saying that out of this 11, our par value is 11. So meaning that our share premium will be what, somebody we are following here? Our 4 premium. Our share premium will be how much here, somebody? Our share premium will be, our par value is 4. Our share premium in total will be what here, somebody? Will be 7. So don't worry about the consolidation. First of all, listen here. So we have our par value is 4 and our share premium is what here, somebody? Is 7 to make this 11 because we have done a share reduction. So then what this would mean is that I'm coming, ladies and gentlemen, here to debit. We have already debited the bank account. So meaning, ladies and gentlemen, that at the end of the day, we shall come here very fast. We shall come very fast here and credit. So we credit which account here? We shall credit the ordinary share capital account. The ordinary share capital account. With this, you've told me it's 4. Remember, the total rights were 3 over 1 times 600 times 4. Could you kindly give me this figure first of all? Just give me the figure. Don't worry. Give me the figure. The ordinary share capital, we are taking 4. So 3 over 1 times 600 times 4. What figure are we getting at the end of the day? 7,200. So please slightly there, put there. And then, of course, we have another credit. My board is quite little there. We have another credit, which is what here, somebody, the share premium. Another credit there, which is the share premium. So remember, share premium, either I get the balancing figure or I can calculate. The better thing will be to get the balancing figure. What is 19,800 minus 7,200? 19,800 minus 7,200 gives me what figure, somebody? Yeah, 12,600. I can easily take that shortcut, 12,600. So I'll come back to what you guys are saying. But for now, first of all, I have it there. The narration there, of course, will be on issue of what year? The rights. On issue of the rights. Cash received on issue of what year rights. You can write anything there. Let's go to number 4. Let's go to the 4th transaction, and then I come back to your consolidation. So 4, what are we told, ladies and gentlemen? So for 4, this is what we are told. We are told here, the next one, is that the company's major supplier has agreed to convert an amount of 1 million owed to him into fully paid ordinary shares at par. So we have, in this case here, some major supplier. Remember, our suppliers are total payables are 1820. Out of these, 1,000 will be redeemed and converted into shares. 1,000. I'm talking of 1,000 because our figures are in thousands. So 1,000. So could you kindly give me the 2 accounts that will be affected? Could you kindly give me the 2 accounts here that will be affected? Give me the 2 accounts here that will be affected. Give me the 2 accounts that will be affected. Thank you so much. I can see somebody saying, of course, there is a payables. We have payables. We have payables. We have payables is going to reduce. Payables is going to reduce because these guys, it's like we have paid them. Payables will reduce. So if payables is reducing and I'm not paying them, don't tell me to credit bank. If payables is reducing because we are going to give them shares, which 2 accounts are going to be affected? Number 1, it will be payables. Number 2, it will be ordinary share capital. So of course, I'll come and cut down the payables by saying here, number 4, we debit payables. We debit payables, and then we create, ladies and gentlemen, here, the ordinary share capital. The ordinary share capital. So with how much? The ordinary share capital with how much? Are you able to see the figure? No, it can't be capital reduction because here we are so sure of the 2 accounts to be affected. We are so sure of the 2 accounts to be affected, aren't we? Right? So it cannot be capital reduction, really. It can't be capital reduction. So it is at payables and ordinary share capital. Let's read this again. So it's 1,000. It's 1,000. I know you guys can write the narrations there. Let's read this again, ladies and gentlemen. Let's read these narrations, ladies and gentlemen. What do we have here? What we have, ladies and gentlemen, here is this. We are told here, let's read this again, Odinga. The company's major supplier has agreed to convert 1,000. It was a liability, so you're supposed to debit his account owed to him into fully paid ordinary shares issued at what year? Issued at par. So it is the ordinary share capital that will do what year? That will change. That will change. So I hope you are in agreement as pertains that. I hope you are in agreement as pertains that. Now, ladies and gentlemen, from there, I'll go to note number 4. Note number 4, the bank requires immediate payment of the overdraft. Let's first of all pay the overdraft. So when I pay the overdraft, I should debit which account, credit which account. We are going to pay the overdraft. We are going to pay the overdraft. Can somebody in this case here guide us? Which account should I debit? Which account should I credit? I'm going to pay the overdraft. Please write for me there, DR, which account, credit which account very fast. Debit bank. But Abdul, you're going to pay. Abdul, you're going to pay, Bwana. Right? None, self-balancing. No. You have to do something. So, of course, in this case here, it's overdraft. It's overdraft. We have an overdraft account. So, in this case here, we shall come here, number 5, and the debit, overdraft is a liability. So, you debit the overdraft, and then, of course, you credit what year? Bank account. With how much? Who is able to see? You can't say that it's self-balancing. At the end of the day, you must be seen to have canceled the overdraft from the financial statements. And your bank balance, in this case here, must also go down because you have paid. You must be seen to do that. So in this case, ladies and gentlemen, what do we have here? We are told the overdraft, they have given us the overdraft amount. The overdraft amount has been given to us, it's 1,100. So 1,100. So we have here 1,100 like that. 1,100 like that. Thank you so much. Now, ladies and gentlemen, from there, we shall go straight away to this question here. This was quite an easy one. Still number 4, the bank requires immediate payment of the overdraft, but has agreed to convert the loan currently payable on demand. right, into a debenture carrying an interest of 10% per annum payable in full in the next 5 years. So could you kindly tell me what to do there? Could you kindly tell me what to do there? Could you kindly tell me to do there? There must be something that I should generalize as an accountant. There must be something that I should, in this case here, generalize as an accountant. Give me the two accounts. Tell me debit this account, credit this account. Please, if there is a day that I would want us to be together, it is today. This is so important. This is so important. So in this case here, credit debenture because it's a new liability. Thank you. Credit debenture because it's a new liability. And then you debit the bank loan because it's like you are repaying that bank loan. You debit the bank loan to offset it, and then you credit our new debenture. Thank you very much. So in this case here, number 6 here, we shall come and debit the bank loan, the bank loan, the bank loan, and then of course we credit the 10% new debenture. But the question is, by how much? By how much? By how much? By how much? 1100 imetoka wapi? Asante kwa kuuliza. 1100 imetoka hapa. 1100 imetoka hapa. Ndio hii overdraft tulikuwa nayo. Bank overdraft, 1100. Because of that question, now we are able to see the bank loan, which is secured on land, which is being written off for the time being, and we're going to be given some kind of what here, an extended better arrangement, new debenture. So in this case here, the bank loan, ladies and gentlemen, we should debit and credit with what amount? With 4,000. With 4,000. Thank you so much. So we have your debit, bank loan with 4,000. This one here with 4,000, like that. That's number 6. So from there, ladies and gentlemen, this is quite an easy one. We go to note number 4. Note number 4, I think. We go to note number 5. The balances in the accumulated loss and the goodwill accounts are to be written off. Are to be written off. So in this particular case, could you kindly tell me what is to happen there? What is to happen there? We have accumulated losses here of 2070. And then we have our goodwill of 1,300. Who can, in this case here, advise us? What do you think in this case here is going to happen in this particular note? In this particular note, please talk to me. Let's start with accumulated losses. Let's start with accumulated losses. Let's start with accumulated losses. They want me to debit capital reduction, credit goodwill. Great, great. So first of all, ladies and gentlemen, for goodwill, you see goodwill, okay, you can decide in this case here to handle both of them together. Credit loss, credit goodwill, debit capital reduction. You can decide in this case here to handle both of them together. Both of them together. So what they're telling me is that, what they're telling me is this. 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 Remember, when you are learning financial accounting in CPA section 1, you are told for double entries, you should always remember what we call the pairs. Always remember what we call the pairs. Pairs, that purchases, expenses, and assets. Whenever they increase, what do you do? Whenever they increase, you debit. Purchases, expenses, assets, whenever they increase, you debit. Revenue, liabilities, share capital. Whenever they increase, you credit. So these are credit entries, debit entries whenever there is an increase. Remember, a loss is a type of what? An expense. A loss is a type of an expense. So whenever we incur these losses, what do? We debit, like the P&L, right? So already if we have a losses, it has got a debit entry. And that is why I'm so happy, because I'm seeing students saying that the accumulated loss will be credited, right? Goodwill is an asset that has got debit. To cancel it, we shall credit goodwill, right? So in this case, these students are telling me something very nice, that because we are crediting those two accounts, then to be in line with what they have said there is that we shall come and debit both total there. We debit our capital reduction. We debit our capital reduction. We debit our capital reduction, and then we'll come and credit here the accumulated losses, and then we credit here as well what here? Goodwill. So accumulated loss iko na pesa ngapi hapo? Accumulated loss iko na pesa ngapi? 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 Uye wataka kuniongelesha? Aha, goodwill unasema ni 2070 eh? Goodwill unasema goodwill ni 2070. I don't know. Let's have a look at this. Let's have a look at this. What do we have in this case here under accumulated losses? 2070. Thank you very much. So 2070 is what we have here. 2070. How about goodwill? Goodwill iko na pesa ngapi? 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 Wataka kujibu. Goodwill unasema goodwill is 1300. So goodwill is 1300. And then, ladies and gentlemen, the two added together now should be debited to the capital reduction. The two of them should be debited to the capital reduction. 3370. 3370 like that. Being cancellation of what here? Accumulated the loss and the goodwill. Accumulated the loss and the goodwill. So pairs is very easy. Remember pairs. Basically, if you purchase goods, what are you supposed to do? Debit purchases account, right? When you pay insurance expense, debit insurance expense. When you incur a loss, debit that loss account. So the way these things are, they are on the debit side. Now that I've been told to cancel and write them off, I need to go to their credits and subtract them by crediting those accounts like that, and then I debit both to this. Now we move to the next thing, ladies and gentlemen. The next thing, ladies and gentlemen, what do we have here? The next thing I'm told here, note 6, development expenditure is to be written off. Are you able to see development expenditure? Is there anybody who is able to see development expenditure anywhere? Is there anybody who is able to see development expenditure? Is there anybody who is able to see development expenditure with additional information? Yes. 750. So then could you kindly advise me which accounts in this case here am I going to affect? Remember, these are write-off. Those are the campaign. Don't tell me bank will be involved. Bank will not be involved, right? All right. I can see 9 charts only. Those are too few. Those are too few for me. Debit, capital reduction, credit. You guys are very bright. You are telling me to debit, capital reduction, and then I credit the development expenditure. Thank you so much. I don't even have to write down that. Right. So we have there, that's quite easy. We are told here development expenditure is to be written off. It is 750. So what have we done? We know that development expenditure will be credited. Then the other amount automatically pass through our capital reduction account. And then at number 7, we are told that the remaining assets are to be restated to their fair values as follows. So we have land and the buildings at 320. We have plant and machinery 1,000. Inventory 1,500. Receivables 1,700. So then, gentlemen, I would want to see whether there is any student in 5 minutes who will be able to pass for me the proper journal entries for note number 7. I'm giving you exactly 5 minutes to see whether there is even a single student who will be able to capture note number 7 in a journal entry correctly. This is the easiest actually. I'm giving you 5 minutes. Right. I can see students have really done very well. What they're telling me here, what you're doing here, debit capital reduction account 160, credit what year? Credit loans. And the building 160. Oops, sorry. James Kia, debit capital reduction 3440, credit assets each 3440, debit. Or you want us to do separately, you can also do them separately. But if I'm the one here, Mary says debit land and the buildings 160. Right? Debit capital reduction 3280, credit plant and machinery 3040, credit inventory 400. You can decide to do them separately. You can decide to do them separately. But if I'm the one doing this, this is how I will handle. This is how I will handle. This is how I will handle this transaction. This is what I shall do. This is what I shall do if I'm the one doing this. It's not a big deal, but you can also decide to do them separately. No worries. No worries. So, ladies and gentlemen, what we shall do there, what we shall do here is quite a simple thing. It's quite a very simple thing. You see, assets are, some of them, I think they are going up, others are going down, right? It's fair valuation. It's revaluations. It is revaluations. It is revaluations. It is revaluations. So then what I need to do, ladies and gentlemen, here is to come and really talk about this. We have debits. We have credits. Let's check out. So the first item that we have here, which was revalued either upwards or downwards, this is straightforward. This is really straightforward. What we have here, you can see the remaining assets are to be restated to their fair values as follows. So like land and buildings now is 3320. 3320. What was the figure given here for land and buildings? Land and buildings, it was 3160. So 3160 land and buildings, and now we are talking over how much somebody? 33 what? 20. All right. Is that an upward revaluation or a downward revaluation? Upward or downward revaluation? Upward or downward revaluation? It's up, isn't it? Upward of what year? 160. Thank you very much. Upward of 160. So when we revalue our assets upwards, what are we supposed to do to that particular asset account? What are we supposed to do to that particular asset account? Debit the asset, debit the asset with 160, right? Now, what happened, then I saw most of your answers, you guys were saying, or am I the one who saw people saying credit 160? Let me check. Let me check. Let me check there. Debit land 160. Let's handle these assets differently. Let's just handle them differently to avoid confusion. Let's handle these. So credit, or you are saying credit capital, Okay, let's handle them separately. So we start with the plant and equipment, plant and whatever, plant and whatever. Our PPE, it's called the PPE. Our PPE, ladies and gentlemen, we are told here that our PPE did what? If you look at this, our PPE went up. Our PPE went up. Initially, we had land and buildings here of 3160, all right. And then we have, now they have gone up to the 320. So the difference will be 160, which basically means what that we are debiting, right? So you're supposed to come here and debit our land and the buildings, land and buildings. And then, of course, we shall go straight away to capital what year? Reduction. With how much here? 160. 160. How about the next asset? Narrations are not so good. No, they're of course obvious because whatever you write will be correct, right? Now, from there, ladies and gentlemen, we have the next asset, which is plant and machinery. So plant and machinery, what is happening with plant and machinery? What is happening with plant and machinery? You can see it is here at 1,000, but initially plant and machinery was at 4040. This was so big. It's a big write down, right? 4040 to 1,000. So 4040 to 1,000. So we have here our machinery. Machinery, in this case here, initially it was at 40-40. But right now, ladies and gentlemen, we are seeing it's gone down to 1,000. Right? It's a decrease of how much? A decrease of 30-40. So when machinery, in this case, it's an asset. When machinery, ladies and gentlemen, decreases, of course, I shall credit the machine account. Isn't it? So I shall credit the machine account, and then we debit what here, somebody? We debit what, somebody here? We debit what, somebody here? Somebody talk to me. We shall credit machine account, and then of course we debit the capital reduction. We debit the capital reduction. So in this case here, we have for machinery, we are debiting a capital reduction. So we are debiting here capital reduction with 30-40, and then we are crediting our machinery account with 30-40. So for what here? For reduction, to record reduction in value of machinery. Let's move to the next one. Now, ladies and gentlemen, the next one they are talking of, the next one here that they are talking of is called inventory. Inventory is to be restated to 1,500. But our inventories figure, what did we have here for inventory? Our inventories figure was 1,900. So are you seeing again a reduction? Is there somebody who is able to see a reduction? The carrying value is higher and the restatement is lower. So inventory is reducing. Reducing by how much? Who can give me that difference really? Who can give me that difference, my good students? Who can give 400, The difference I'm being told is 400. It's a reduction in inventory. Being an asset, I'm going to credit inventory. And then of course we debit capital reduction. So debit capital reduction. So we have here, we are going, ladies and gentlemen, in this case here to debit capital reduction, and then we credit inventory. We credit inventory with how much? With 400 like that. I hope you guys are following. Now we are almost there. Ladies and gentlemen, the last one for this particular table is called receivables. So for receivables, are you able to see the old receivables? Old receivables was 1,700. The restated receivables are 1,700. So then what do you recommend? Because I'd given you this thing to really work on. Are we going to pass any journal? Are we going to pass any journal here? It's 0 increase. Nothing, no journal there. Then the last one, ladies and gentlemen, here, the amount in the share premium account is to be utilized in the capital reduction scheme. So please go and look at the share premium that you have. We have a share premium amount here of 2,000. Remember, share premium is a credit entry. And if you'd want, ladies and gentlemen, to cancel, then this share premium, what do you do? Share premium, just like share capital, it's on the credit side. And they're telling me to cancel to finance my reorganization. Yeah, so debit share premium, and then we credit what here? We credit capital reduction. You guys are bright. So debit share premium, and then you credit capital reduction. So have you done that? Is there somebody who has done that? So we are being told here to debit. We are being told to debit here. We debit share premium, and then we'll come and credit what here? Somebody capital reduction. You credit capital reduction with how much? You guys have given me the share premium. If you look at the share premium very well, it has an amount of 2,000. If you look at this very well, it has an amount of 2,000, the share premium, 2,000 there. Yeah. Now, before I explain this concept of really, which should never scare you, even if you don't get it correctly, the consolidation, even if you don't get it correctly, you will only lose very few marks. Consolidation, you will lose very few marks. You'll be surprised. Even me, when I was a student, some of these things, I was not even looking at them very nicely, right? You lose very few marks because the first one right off is correct. You'll only lose marks of the this concept of the premium and whatever. You'll end up getting so many ticks if you look at the answer of CASNEP. So I'll come back to this consolidation. But for now, if you look at this particular question, ladies and gentlemen, they want us to give them what here, somebody, they want us to give them here. They want us to give them a capital reduction account. Already you have everything. Oh yeah, unakuja hapo unadunga T account. Unadunga T account kubwa kabisa. Unaita capital reduction account. So for instance, I would help you to pass the first one here. I'll help you to pass the first entry. I'll help you to pass the first entry, the one that I have on the board. So like now here, you are telling me to credit capital reduction, isn't it? You are telling me to credit. I just want to help you to enter this one alone. You are telling me to credit capital reduction. Unfortunately, for whatever reason, when we are marking these things, utapata mwanafunzi ameamua credit, atakuja tena andika hapa jina capital reduction. Hivi, hebu angalia huyo mwanafunzi sasa. Ataandika capital reduction 2000. Is this correct? Is this correct really? Is this correct? It cannot be. It cannot be. You can't have like capital reduction up and up or capital reduction. You look at, in this case here, we are crediting the capital reduction through which account? We must look at the other account which is being affected. So in this case here, I'll come and mention here, ladies and gentlemen, I'll come and mention here, I'm crediting the capital reduction with the other account. That's what you do. So come and write there, share premium of 2000 like that. Sasa ebuanza kutoka kwa mwanzo kabisa uone mahali una affect capital reduction. Mahali una affect capital reduction. Kwa mfano, if I remember, there was something that we did of cancellation of ordinary share capital of 6,000. Tukasema debit capital reduction, debit share capital, credit, in this case here, credit what here, capital reduction. Tukasema namna hiyo. Tukasema mbesha shiga na naweza kuwa nakumbuka hizi pesa haraka, please nisaidie. Tulikuwa tunasema hii pesa namna gani ilikuwa pesa ile note ya kwanza ilikuwa 6,000. So kumaanisha, given the first note, I'm going, ladies and gentlemen, in this case here, to credit the capital account. I'm going to credit the capital reduction account, but now using which account? Which account should I mention here? Somebody, if you're following. If you're following, which account should I mention here? Somebody. Which account should I mention here? Somebody. The other one. So share capital. So share capital there. Share capital there. So share capital is 6,000. So could you then, ladies and gentlemen, just go through all the entries with the share, or rather with the capital reduction, and then you do the postings. You do the postings, and then we see what you will get as your balancing figure. We see what you will get as your balancing figure. Try your best. Try your best. Try your best. Kuna mahali unapata ulikuwa na 3, kama nakumbuka. Kuna mahali ulikuwa na 3. Yaani ulisema sio ni 3 ama ni 2. Ukasema for example debit, I think capital reduction. Ukakuja hapo ukasema credit, accumulated loss, ukasema pia credit goodwill. Nakumbuka vizuri sana hii. Goodwill ukasema 1300. Hapo ukakuja ukasema accumulated loss ilikuwa ya pesa ngapi? Was it 2070? Let me help you out here. Don't write this. Let me help you out here first. Ukasema hapa accumulated loss, ladies and gentlemen, ilikuwa ngapi? Nikiwe. Accumulated loss ukasema ni 2070. Unaona 2070 accumulated loss ukasema ni 2070 hapa. Hebu angalieni hapa. Alafu ukapata hapa sasa ukapata hapa capital reduction ilikuwa ngapi yote in total? Capital reduction ilikuwa ngapi yote in total hapa? Hizi mbili. Capital reduction ilikuwa ngapi? Ilikuwa ni 3370. Thank you so much. So kumaanisha hapa nafaa nikuje ni debit. So hebu niambieni hapa ndaandika narration gani sasa hapa? I'm supposed to come and debit this account with 3370. So hapo ndaandika nini ndio ukifika hapo usichanganyikiwe? Ndaandika nini hapo? Ndaandika nini hapa? Hii 3370 hapa. Ndaandika nini? Wakati tumecombine accounts hivyo. Ndaandika nini? Two things. Either ukuje hapa straight away uziandike zikiwa kando, useme accumulated loss 2070, goodwill 1300, ama uandike loss and goodwill. Uandike 3370. Zote mbili. Because this 3370 is as a result of what here? The two accounts being combined. You can also separate. It's allowed. You can separate. It's allowed. You'll get your marks there. So please ensure that you are able to finish the entire thing, and then you give us either goodwill or capital reserve. Let's see what you guys will get. So which side are we talking about here? Which side? 40 minutes in each report to balance sheet at NSA. So goodwill of 1800, which will report to the balance sheet as non-current asset, as non-current asset, as non-current asset, as non-current asset, like that. So remember, the balancing figure, ladies and gentlemen, is if the balancing figure comes on this side, you shall have what we call a capital what? A capital reserve. If the balancing figure comes on this side, like now you are telling me that it should be coming here. So goodwill should be what here? Somebody should be 1800. If it's coming there, it should be 1800. So goodwill there should be 1800. Goodwill should be 1800. Great. Goodwill credit side 1800. Now, is it possible that somebody takes a snapshot of this particular working that you have here for capital reduction and post it on our WhatsApp? There must be a few students who haven't gotten that figure. There must be a few students who haven't gotten that figure yet. Right? Now remember that the balance sheet will not take you a long time to do. Will not take you a long. Nimekwama. Kuna mwenye hajapata bado goodwill ya 1800. That's why I would want somebody to send that working there. That's why I would want somebody to send the working there. Oh, we need to do something. We need to do something. I have to do something tonight. I have to do something tonight. Now, ladies and gentlemen, what we could do, I would want to repeat this entire concept again. Very well. Tomorrow I would want to give all of you a free of charge class. Mutakuwa free sangapi? Remember, I'm free from 2 p.m. I'm free from 2 p.m. I would want to give you a free of charge class because I'm even myself, I'm very exhausted. I think I've had a lengthy day. Asubuhi mpaka 10 ikuwe tu jioni. Kesho jioni tuko na subject gani? Kesho jioni. We have a subject from 7 p.m. We have a subject from 7 p.m. Yeah, we are exhausted. Today is quite a tough day. 2 p.m. iko sawa. 2 p.m. iko sawa. Asubuhi no. Asubuhi no. Asubuhi no. Asubuhi I'm very occupied. So jioni tuko na. So kwa hivyo kesho tufanye from 2 p.m. 2 p.m. or no, but at 2 p.m. Hiyo imegongana.